today in this session we'd like to look at salvage vehicles. So with CarFling Asks, it's a new segment where we're looking to be able to get some insights from inside the heads of some industry veterans. So we've got two generations here, and William Miller is the founders of Dealers Online, and I'm Richard Scott Martin, and I head up the innovation team at Dealers Online. And we're obviously uniquely positioned in terms of where we fit in the market, and given that we're a platform business and we provide digital tools to all different segments of the market. There's some topics that we really want to talk about and spend some time discussing. So I think today in this session we'd like to look at salvage vehicles. And I know this is a hot topic at the moment. There's a lot of pressure on the market, and desperate times calls for desperate measures, and there's a lot of desperate people out there who are looking for all sorts of ways to make more money. So unfortunately I think these conditions bring out the worst in people. I think we'll maybe just to start with a general question, but what's been your observation in terms of like what's happened in the market from when you were actually in the dealerships to what you see now? What's been the biggest changes and kind of what's stayed the same?
I think the biggest change is access to information. In the good old days, I'd say we used to be able to get a feed from a company called Autodex who did the quoting on the actual repair on the vehicle, which at least gave you a good idea what was wrong with the vehicle, even though it wasn't repaired, but you'd have a value and you could see if it was a serious accident, a small accident, a bump. But at least when you were trading the vehicle in or selling the car, you could get a variant, okay, this car is cleaner or good. But a couple of years ago they switched that off, and I think a lot of it was around the POPI Act, and obviously it's a UK company, so they have their own act, and they decided that it was information that wasn't allowed to be shared. So they cut it off, and then the dealers that were looking for that information had nowhere to go, so they had to try trade in blind and not know if the car had been in an accident or not.
When did this happen?
I think I don't know the exact date now, but it's been at least 5 years.
Okay.
But it's also there's pros and cons to everything. I think some of the dealers that didn't want the information because they didn't want the consumer to know, but obviously the legitimate dealerships, the franchise dealerships wanted to know because they had to resell the vehicles.
Sure. So it has created the opportunity, I suppose, for some of these other salvage vehicles to re-enter the market. So I mean, maybe could you give us a bit of an idea of like typically how that happens nowadays, and then we'll maybe discuss, how you can protect yourself as a dealer and as a consumer. I mean, what are the things that you can do? So to maybe start off just. What's the scam? What's the scheme in the background?
Okay, so I think we also got one of the big things that also changed that many years ago is when the vehicle was in a major accident and it was uneconomical to repair, the vehicle used to be coded as a code 3. So that meant it was written off, it was seen as a rebuild if it came back into the market. Then the finance companies wouldn't finance it. At least you had a very good idea that the vehicle wasn't something you wanted to buy as a dealer or as a consumer. But if you did, you'd get it at a very good price and you knew what you were risking doing it. But that many years ago, so say 5 years ago, they decided not to code all these vehicles. So the accident would happen, it would go to either the salvage or the panel shop. They do an estimate, and anything over 60% of the value of the vehicle, they would then not code it as code 3 and leave it as a code 2, but it would still be sold to the market as a salvage vehicle. Yeah. But then you could have any dealer or consumer buying it there, repairing it, and not necessarily in the best repair jobs done on it, and then push back into the market as a normal vehicle normal used vehicle as that. So and most of the time, if it still had a motor plan or service plan from the OEM, that would still be valid. So the consumer had no idea that he was driving a salvage vehicle.
Sure. And just to clarify, Code 1 is new, Code 2 is used, and then Code 3 is a rebuild.
Yes.
Okay. So effectively, the vehicles that should have been were written off weren't classified as such, which then created the opportunity for, call it like repairers and a new sort of like business model to emerge, which was effectively like repairing the car and then, like putting it back into the market.
Absolutely.
So how do those vehicles get back into the market now? I mean, what is the main channels that these guys are using to kind of get the vehicles back to being in use?
Okay, so I mean, to give you a little bit of numbers behind it, so every month there's 10,000 vehicles that are written off at least by insurance companies, and there's some big salvage players that actually get them from insurance, sell them. When they were coding, we would say you'd get about 40% of trade. Now that they're not coding, they get 60% of trade. So it's a 20% better off for whoever insured the vehicle.
Cool.
So they, instead of it going to be going to a legitimate paint shop to have it repaired by an approved OEM panel shop, they would then just send it to whoever they can when it's spawned on the salvage auction. So if you're looking at 10,000 vehicles coming back into the market monthly, sold on a salvage auction, which is not an auction that a franchise dealer or upmarket dealership goes to buy stock. It then goes to we call them backyard mechanics. They buy it there, repair it, and then a lot of cloak and dagger happens then, where they go and either trade the vehicle in or sell the vehicle without giving its full history and saying, listen, this was a salvage vehicle, that's why you're getting it at a good price. I think what actually happens is that's when the real money is made between, if you imagine getting it at 60% of trade, spending as little as possible to get it to a decent look, and then trading it in or selling it to the dealer. Sure.
Because I mean that, I suppose they're making that margin misrepresenting the vehicle, because effectively, the consumer's paying as if it were a normal vehicle, not knowing that the person who bought the vehicle paid a lot less for it because it was on a salvage auction. I think with that, you're saying the dealerships are at risk because essentially they're cleaning the vehicle by trading it in, and sometimes the dealer's none the wiser, and then inadvertently, sometimes the dealer doesn't know, the consumer ends up buying that vehicle from the used car floor, and sometimes it's just too good to be true. That's just kind of, I mean, we've had personal experiences as well with these vehicles. So are there any preferences that, in terms of makes, models, like, what types of vehicles do they typically go for? Because I imagine that some vehicles, there's more money in them because they're more expensive, they're more desirable, more popular. So have you seen any patterns in terms of which vehicles, makes and models are more at risk of?
So it can happen on any vehicle, but I mean, you must look at where is the parts most accessible and freely available, second-hand or a non-OEM part, which is what these guys use to put this vehicle back on the road. So yes, you can have it on any vehicle, but obviously the vehicles that are more parts available that they can repair the vehicle quickly is what they will do. So they'll go specifically looking for certain brands where they know they can get parts freely and there's more available. So they'll go to other scrap yards and get the parts there, put it in, and off they go. Fenders, gearboxes, depending on what they need to get the car back on the road.
So that's quite interesting. Are there any brands that are particularly susceptible? I mean, without naming and shaming, but
we can just look at in South Africa, there's a race between the two brands, Volkswagen, Toyota, and Ford at the moment, depending on which one. So there's more of those vehicles on our South African roads. So, I mean, without naming anything, those three would be important, because the more cars, the more accidents, the more parts are available. And also to keep the industry rife, those guys are importing these non-OEM parts for those vehicles.
Sure.
So yes, I suppose those three would be the ones I would go for if I was in that business, which I will never be.
Yeah. But it seems like, I mean, the insurers are making more money.
They are.
Then there's the repairers who are also making more money.
Not necessarily, because remember, it costs a local panel shop to get an OEM approved panel shop. They need to have all the tooling. They have to have. It costs them a fortune to be able to get that authorization to repair a certain brand, and they have to spend a lot of money to do that. So those guys now aren't getting as much business as they used to, because they're writing the car off more easily than they would have before. So instead of it even going for a quote, even the tow truck looks at the vehicle and he goes, okay, this is more than, okay, let's take it straight to the salvage yard. Then the assessor goes to the salvage yard and says, okay, yes, you're right, this thing is... And remember, I mean, if you're really looking at new parts, which is not necessarily what they quote, a front bumper, 2 xenon lights on an older vehicle, still if you bought them new, is 100 grand. So... it doesn't gel.
It's not tech, It's interesting because, okay, so we've got, call it like the repairers who are actually losing out in business because there's less vehicles to repair. Because essentially it seems like there's a more preferable channel for the insurer and obviously for the customers of the salvage auctions. So it seems that, you know, there's more... They're losers. I mean, who else is losing? The dealerships are losing. The consumers are losing.
Well, definitely the consumer, because the consumer has no idea. He's going to a reputable dealer to buy a vehicle. The reputable dealer's actually traded it in from an unsuspecting client that hasn't really given them all the information about the vehicle, and maybe sometimes doesn't know himself, because it's a chain reaction. Where was the end? So what has actually happened more recently is you know, Samra, who governs the panel shops in South Africa, has been rallying this objective to try and fix this problem. So with that, I lost my train of thought.
No worries. So with that, Samra looking to...
They've been rallying the market to try and push them to actually be able to stop this not coding, basically, because code 3, code 2 is a major thing. If it's a code 3, you can't get finance, so it will reduce the value of the vehicle. So I mean, it's just that 20%, but also you don't want to be driving a car that you know it's been written off somewhere along the line as a consumer.
But I mean, it's in the word, like rebuilt. I mean, you know, it is something else, you know. And in terms of like the rest of the world, so looking at like American, European markets, what are the trends there? I mean, does this exist anywhere else in the world, or is this a uniquely South African thing?
It's not uniquely South African, but definitely in the European markets and in the US, that information is freely available. You put the VIN in, you get all the history, the accidents, how many times there's been accidents, the service history. It's all available at a click. Unfortunately, in South Africa, there's guys that want to give this information, guys that don't, and it comes down to, you know, who's making the buck here. And unfortunately, if we don't get that right, it's just going to be, I mean, 10,000 vehicles a month is a lot of vehicles coming back into the trade. It's going to be resold. And remember, the warranty, if you don't write it off properly, discontinue the warranty and the freeway plan or the motor plan, the insurance companies carry on paying the servicing. And if you let's take an Audi Quattro, for instance, been in an accident, it's very difficult to get that Quattro realigned. And with that, as you're driving, there's many things that can go wrong. And then when they do see it as the OEM service center, they go, okay, this car's been in an accident, let's pull the plan. But that's too late, because some consumers actually bought the vehicle already, it owns it.
Yeah, no, it's actually quite crazy. So I mean, it's not necessarily. It seems like it's in some ways, a uniquely South African problem.
Well, in the rest of Africa too, especially because that's a dumping ground for a lot of the salvage vehicles that come from Europe and the US. So you'll see a lot of those grey imports are sitting in Africa.
Well, we've seen it with like our clients in the Middle East, particularly with floods in the States. Right off. Thousands of vehicles, and then some will make their way across into a different region. And
there, with a flooded vehicle, you can't see any damage. It's all in the wiring, and that can take a long time to actually rear its head.
So at least in the States, I suppose they're reporting it. I imagine it's like stricter governance and legislation in terms of the requirements on businesses to be able to declare, the vehicle's history. So it seems that a lot of this issue is just, there's a vehicle, we look at it, we can see its current condition because it's, it's in front of us, we're looking at it. And there might be some telltale clues that, help us understand. So what are some of the things you look at when that vehicle's in front of you? What are some of the things that you would do to check to see whether or not, further investigation is required to be able to go and look into the history of this vehicle?
So, I always look at the sort of, if I can get an option to look at who owned the vehicle and for how long, especially when I'm trading a vehicle in, I look at firstly the disc. It shows you when the last roadworthy was done and it was put in that person's name. I look at the actual title and see when did it go into this person's name, because if the guy's had it for less than 6 months, you have to start asking a question. So sort of, okay, why? So then you can ask the client a little bit more. But try and get as much information. Did you buy the vehicle new? Did you buy it second-hand? Where did you buy it from? Just to get a good feeling. And then the vehicle itself is a telltale. You look at the actual bodywork. And just the lining up of the different doors, fenders. If you open the bonnet, you'll see if any of the bolts have been removed, and then you start getting a feeling. And if you've been in the trade for a long time, you actually have a gut feeling about a car, and you say there's something wrong, and then you start digging. And then there's ways, but yeah, ownership is very important, and what is happening now and allowing more access to information. eNate is opening up a feed where we'll be able to get the previous ownership. Obviously, it's not open to everyone, but if you do want to do a call and say, listen, you want to know who owned this and did it pass through an insurance company into a salvage company into another consumer, and then it's a red flag. You want to make sure that you don't trade this car in, or you want to go and find out more information about it. So we are currently doing that integration with them, where we'll be able to send them a VIN and they'll give us the report on the vehicle, which will make a big difference to the trade.
Yeah, for sure. I know we've had discussions also with the telematics providers, but again, it's also quite a difficult one, because the slightest bump to a big accident, but they do have a classifications for major incidents. The problem is just there's so many of them. So in order to be able to cover the market, you need to provide for all the different providers. So it's quite interesting. So the first part is around the ownership history, and call it just the story that the customer is selling you, in terms of why they're looking to kind of sell the vehicle, or even purchase a new one, trade it in. I think that's also quite interesting when you're looking at the body language of how they respond to certain kinds of questions, the integrity of their story. I suppose you have to put that together with how they hold themselves, what they look like, that sort of thing. But sometimes, people can get past that, particularly if they've done that a lot of times. We've seen instances where family members assisting, or there's some maybe even like complicit third party that's actually pretends to has got a legitimate story, but they're just the beneficiary of one of these schemes.
Unfortunately, greed does do that.
Yeah.
Then they mask the real truth because they're not going to make the money if they don't.
And then you obviously said like the car, so the panel alignment, the paintwork. You're looking at like the actual chassis, if you can put it up. Are there any other sort of telltale signs that you look at?
So I mean, obviously paintwork is there's actually, you can actually see when they haven't done it properly, and most of the time when you're trying to do something cheaply, you're not going to sand it out properly, and there's dust under the clear coat or even under the paint. So when you start and you find something, you tend to go and look a little bit further. I mean, carpets are very important. You can go and look to see if they've been taken out of the car and they haven't been put back properly. The back in the boots, those fenders have to be welded back on.
Okay.
So you will see that, and then I mean it comes as one piece when the car comes new, but when you've had a major accident and you've got to add that piece on, you see it.
Sure.
But you do have a trained eye. I mean, the consumer goes, "Oh, this looks beautiful. It's red or it's blue."
Yeah.
But I mean, we had it with one of our own staff members that bought a vehicle on a classified, which was questionable already because she paid cash, and then when I had a look at the car, I mean, without saying to her, I said, "This looks like a salvage vehicle." And if I dug, it's exactly what it was. But they sell vehicles on the classifieds like this quite easily to the consumer because they make it look the part. And it normally is at a better price. So the price also dictates the decision on the purchase then. But everyone else is asking so much, I've got a bargain. There's not normally bargains out there unless there's a story behind it.
Yeah. I think that's the truth. That's too good to be true, rather usually is. But I mean, the classified, so Gumtree, Facebook Marketplace, Auto Trader, Cars That See Us Today, I mean, there's seemingly almost like a large number of these platforms that are available for these people to list these cars. Is there any platforms that are more susceptible, or is it private sellers predominantly a lot of the time where this happens?
Yeah, so it is, but they disguise often as private sellers, but they are dealers or resellers, where that's their business. They buy, fix, and sell. The reason you'll find them on the classifieds that don't actually physically see the asset is because they don't want you to see the asset. And that's one of the reasons why even on our platform, if we do the actual inspection and put it up ourselves, it's more credible. But if it's just a dealer to dealer that no one actually has stood by the inspection, other than if it's a franchise dealer, you'll do it as well as possible. But you'll find that they'll buy our vehicle because we've touched it. They're used to buying from us. On a classified, it's you have to physically go and look at the vehicle, and if you're not a trained buyer of vehicles on a daily basis, it's very difficult for you to actually find the issues with it unless you take somebody with you. And can I take my uncle with me, or can I take a mechanic with me? So that happens often, and that's at least you can not make a mistake then. But if you just look at the price, see the car, fall in love, pay over the money, you're in trouble a lot of the time.
What are there any protections afforded to consumers? Let's say it's too late by the time you realise that you've purchased the vehicle. What avenues do you have as recourse? So I suppose it depends on who sold it to you. I mean, peer-to-peer, consumer-to-consumer, there's not much. I know that there's the CPA.
There is a CPA, and it is something that you can fall back on, but it's very difficult when you're trying to fall back on the CPA with an individual that sold it to you.
Yeah.
Because how the legislation reads is the person selling it to you needs to give you all the faults. But if he doesn't know himself in some breaths, then there is no such thing as is, and you can't sign away the legislation. That's what it says. There's no such thing. So only the auction mechanism allows you to sell it as it is.
Okay.
But consumer to consumer, there is still CPA. But to go back and have a legal fight against that is a still case. It's a long journey to try and reverse the deal. A lot of the guys do contracts, and maybe there's a warranty in there, maybe there isn't. But most of the private deals are just relaxed. You have the money, take the car, and then you know it's going to be a process to try and get your money back if the car isn't as described.
So one of the best ways is to kind of buy from a reputable dealer, because their reputation is actually what matters in the market. So they're more likely to be to hear your quarrels and potentially rectify the situation because of their...
Absolutely. You'll pay a little bit more, probably, not always, but at least you know that they're the CPAs there, and you've got 6 months. Not like you're looking for something wrong with the vehicle, but if there is anything that happens, then at least you can go back and say, listen, this is giving me issues, how can you help me? So you'll find the dealer will then, preferably, because they want to move the risk somewhere else, they don't want to carry the car for 6 months, so they'll either give you a warranty on the vehicle or they'll sell you one. But unfortunately or fortunately, you can't claim for those warranties in the first 30 days, otherwise they'll just use them to recondition the vehicle afterwards. But you want to try and get your customer back, so we want to give the car to him in a reconditioned condition, and then you'll be a happy customer, and hopefully you'll send more clients and you will sell him more cars over the years. So you're not just selling the car to never see him again.
Yeah, and often a lot of the time how you handle the situation is like an opportunity to also build trust.
Absolutely.
It's an opportunity to actually strengthen the relationship, because how you handle that will influence how you will handle future situations.
Absolutely.
So I suppose one aspect of it is like knowing who you're buying from before you know necessarily what you're buying, but you have to look at the two together. You know, who you're buying from and kind of what you're buying. So I think, is there any sort of concluding thoughts or any sort of message that you've got for consumers out there and to dealers in these times?
So I think, let's take, remember, anybody and from I'd say a mom and pop dealership to a franchise dealer can advertise on a classified. So it's important to know who you're buying from, even though you think you're buying from, say, Auto Trader. It's not Auto Trader that's selling you the vehicle. The car is just advertised, and it doesn't mean that they're all credible dealers. It's whoever would pay for the advert. So the asset needs to be verified, and I think that's something that we're working very closely with at the moment, is to verify assets for consumers, so they feel comfortable buying it. And working with our partners in the industry as well is obviously different provinces, consumers want to know that the vehicle is, as buying online. The car's in Joburg, I'm in Cape Town, it's a really good deal, but is it a really good deal? So just make sure you've checked the car properly and you know where the vehicle's coming from, and you know that you've got to come back on it. For the dealers, it's a difficult place for them at the moment, because they're relying on what the consumer says, and unfortunately the consumer's not always the most trustworthy. He's either been caught or he's part of the problem, and he's repaired it in a cheaper way, and he's trying to make a buck, because today they want to make a buck in any way they can. So the dealer is looking, and he's only got 30 minutes, an hour to find the problem before he closes the deal. So yes, do your test, check the car out, and speak to us if you want that innate integration, and we can do any of the checks for you. There is HPIs and Lightstone reports that you can do, but it doesn't give you enough information at this current moment. But we're working towards getting more information.
I suppose what will it take to end this? What needs to happen in the industry, and to be able to put an end to this?
transparency, and I mean giving us access to the information that the consumer actually should be getting. I mean, it's not you're buying an asset. It's like getting married. You want to know where your wife has been before, what she's done. It's important that you know what you're getting yourself into. I mean, just in a vehicle itself is these little things like, did you change the cam bolt at 120,000 Ks? If you don't know that, you might think you need to do it again. And that's spending money that you didn't need to. There's a lot of things that happen at a certain age in a vehicle that need to be replaced. But if it's been replaced in its previous life, why do it again?
Yeah.
So access to the information, firstly on the servicing, but ownership, was the car at the coast, was it not? There's a lot of, did people service the thing regularly?
Who's got the information?
It's there.
That's not giving it or making it available.
Well, I think the biggest issue that we've got right now is the code 2, code 3. So they're about to launch that you'll be able to get the code 3 information. But the problem is, that's not where our problem is. The problem is the code 2s that aren't being coded, that are still salvage. So giving us information to get the code 3s, that's a rebuild. It won't be financed. The papers will say rebuild, it'll be a code 3. You won't get top dollar for it, but at least the consumer knows, I'm buying that because it's cheap, but I know the risks that I'm taking. At the moment, there's the code 2 that's masked as a code 2, which is actually should be a code 3 is the problem.
Who decides on that being a code 2 or code 3? Who's the judge and juror there? Because that sounds like a powerful position to be in.
Always what we say is follow the money.
Yeah.
Who's making the more money on the specific problem or solution? The solution at the moment is I'm getting 60% of trade rather than 40% of trade. So there's a 20% swing. Who's making that?
Insurers.
It's insurers.
So insurers effectively...
They're sitting with a database of what they've done on every asset. And most of the time, the banks are being settled by the insurance companies when the car's getting written off.
When it's been sold.
So the banks should all get together and say, okay, we'll feed that information in as well, because tomorrow the dealer's going to invoice me for the same car that has been written off in my own books. But no one's doing that check to see, this vehicle was here before and it was written off, now I'm financing it again. But they rely on the fact that the dealer and the bank have a relationship, and if the dealer sends them a car that's not legit, they just go back to the dealer and uplift the deal. So it should be a joint effort. Everyone should be working together to fix this problem. At the moment, some want to and some don't.
Yeah. So effectively, the insurer has to be happy to get less money. I imagine things aren't going to be more economical to repair just purely because of the fact that we have to import a lot of the parts for the vehicles because they're manufactured overseas. So there's already, plus it's in foreign currency, so there's the cost of getting it here, there's the exchange rate cost. So vehicles aren't going to get cheaper to repair either, which is going to make it less likely that they're going to be economical to repair. So the insurers,
but then tell them that and make it a code 3, not a code 2, because they're saying, but I can fix it cheaper, so it's not really, but it's a code 3. It's been written off on paper, so then say that.
What happens to
put another status then?
What happens to all the vehicles that have been sold and the consumer goes and they say they can go and look up to see whether or not the car that they bought is actually...
It's going to be a fun discussion, that.
Yeah.
Because they're going to go back, like we were dealing with one now, it was 2019 that this went through the salvage, and now it's been traded in, and now it's been picked up, it was the salvage. Now you have to go back 5 years of ownership.
The legal, like in marriages and divorces, I suppose only people win are the lawyers. But that's quite something, because the insurers also have to cover the risks, so that means the premiums go up.
That's the thing. So it's
so the price pressure on and the competitiveness of the insurers have driven down the price of the premiums, which meant that they have to make more money on the recovery of the asset, which is inadvertently. So in some ways, our pursuit for cheaper premiums has led to an increased likelihood of salvage vehicles entering the market. So it's quite a complex problem to solve.
It is.
Sure. And I think from our perspective, the best thing that you can do right now, given that the information is not available, is effectively understand who is selling you the car and understand their background and history, and then obviously try and look for signs in the vehicle itself. And if you get a feeling, you should rather err on the side of caution, no matter how good the deal is.
Yeah.
And especially actually
if the deal's too good.
Okay, I think that wraps us up for our first installment of CarFling Asks. So we hope that was interesting, and I think next time we're going to dive into warranties.